Well, hello folks, I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves one question, and one question only: what happened today? And what does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube, and available to you there under the channel L.A. Little, where you can subscribe if you wish. Anytime content is pushed, you'll be notified. These markets, what happened? Let's take a look at the numbers here. Last night we talked about, okay, so what happened? What could happen today? It was mixed. There really just wasn't any good indication yesterday about follow through to the downside, even though we had that. There was no indication as to what was going to happen, and what I did is I just simply said, hey, we don't know. This thing could go either way tomorrow. That's what it did. It barely broke even on that NDX. This is the one that's given the market problems right now. Russell's been trying to lead to the top side, but the NDX has been the laggard, continues to be the laggard. That's keeping the comp back. And we had elsewhere up about 1/3%. In the commodities, they sold back down today. The bonds sold back down. So it's kind of like yo-yo time, up and down, up and down. That's what it continues to be. The Fed speaker, Ms. Yellen, was out there today talking about, a number of things, but the takeaway from what I read is that wage pressures is what she's watching. And we're going to get that employment number tomorrow. That's going to be the big number, and we'll have to see what that wage outlook looks like and whether it's going to affect these markets. So let's take a quick look at these indexes. So you push up, you push down, you push all around, you go nowhere, right? Up 30% after a couple days down. And really not much here. Not much here on the upside. If you wanted to be slightly negative, you could do so saying, hey, you go over, you go back under, you have less volume on the prior day. I would probably take the opposite side of that and say, hey, you came into this area, you couldn't break down underneath it, right? That's the breakdown bar. You couldn't get underneath it and stay underneath it. You stayed over it. To me, that's kind of a good thing. Let's look at the rest of these and see if there's any other tells worth talking about. So the Dow, same thing. Dow was under it yesterday, gets back over it. No volume, but gets back over it. Let's look at the NASDAQ. NASDAQ also was down there pressing, couldn't get under it, stayed there a little doji. Not really going to tell us much there, but again, they're still over it. Now here's one that tells us something on the opposite side, and that's the NDX. Remember, we were just talking about the NDX has been the weakest one. That area that was important to get back over, they didn't do it. A doji on this one as well. That one actually bleeds to the downside, says we want to try to go down. And then the Russell. Now the Russell gets over that bar. Again, doesn't really tell us much. The real key on the Russell is the lows of the high as well as the breakdown bar. So the real key here is actually just slightly above is the way I would read this one. The TA Today charts are going off that high volume low and using that as the key bar. I probably would put that resistance all the way up there, all the way up, and that's what it did. Came into it, couldn't do it. This one is, if you got a silver lining in this market, it is on the Russell, not the NASDAQ. The NDX is struggling. The Russell's trying to take us back up, and over the highs on an ABCD structure. Elsewhere, not so lucky, not so good. Looks like they want to try to push it lower on those technology stocks. Earnings just around the corner, folks. We got Alcoa kicking it off, I think, next Thursday, but the big ones all start the week after on Tuesday. So we're looking at basically, 7 trading days, 6 days. Actually, we're off tomorrow, right? So you've really got 6 days, and then all the big earnings start to hit, and that's going to be really the tell of this tape, which tells me that next week are probably going to be choppy just like this one. We'll be right back, and we'll look at some of the sectors, see if they tell us anything. Transports in particular.
Do you have retirement funds you want to keep invested, yet you constantly worry about a potential market crash? As LA says, you shouldn't worry about a crash until it's time. Through LA's extensive research, he has identified the key characteristics that are necessary for a market crash. In the 2008 crash, for example, our investors actually made money and avoided huge losses through LA's investment advice. Because the markets usually go up, our retirement service keeps you invested when risk is low and reduces your exposure when risks become elevated. There are 3 portfolios you can follow: aggressive, balanced, and conservative. It's a simple process at a reasonable cost that requires very little of your time. To learn more, go to our homepage, hover over Retirement Service, and click Get Started.
As we come back here, as promised, it's the transports we want to look at, and this is setting up ugly, and the Dow theorist must be rolling over, unable to sleep at night, because this is starting to look like a potential breakdown, and a breakdown in a big way, right? Because if we look at the transports, right, that's a huge ABCD structure. Swing point low here, swing point low there, so those are both lined up right up underneath this market. Today, this was the sector struggling. If you look at it on the weekly, you're going to have the same setup over here, down at those lows, trying to break out the lows. No volume yet, but if they break these lows, folks, nothing but the October lows up underneath there. I mean, you got some support on the way, but it's a long way down. And the transports in the Dow theory, if they start breaking lower and the Dow Jones comes with them, that is a bad signal on this time frame, right, on the weekly time frame. So transports are starting to shake it up a little bit. And the one thing that would really get my attention on the transports and actually on the market in general is if we saw the transports actually get down here another month, in other words, get through this month, April, and not break this low. That's going to line up as a swing point low. That would be the first index outside of the energy market, right, that would break down potentially on a long-term time frame, right, on the monthly time frame. Folks, that hasn't happened in a very long time. The only thing we've seen do it so far is the energy sector. And if the transports go with the energy and we start seeing multiple sectors on the long-term time frame start to break down, that's not good news. And if I pull up those sectors and I show them to you, right, qualified trends, and pull this down, you can see the transports would join. The only other one that's in there is the energy market. That's the only one bearish. Everything else is bullish. So that would be a big deal if that were to happen. Let's take a look at the rest of these right quick. Now, I didn't actually get through these, so we'll just kind of glance through them and see what we see. So the IBB, which is the biotechs, still not looking so good. Didn't test that low. Still looks like it's going to try to test the low. So that's kind of a bad news. ITB, right? Housing going the other way, breaking out. We thought it would try to test again. It did. It got over it, stayed over. It's going to be over on the weekly as well. That's good news. Transports we just talked about, we just covered, so we'll move on to the SOX. SOX still struggling. MU Micron was out today with earnings, and let's see what they look like. I know they were up this morning. They gave it up at the end of the day. That's interesting. So even Micron couldn't keep the ball rolling on the earnings report. So again, markets struggling, folks. They're struggling, and as earnings are coming closer, you even get a beat, right? A beat the street, so to speak, where you lay the bar low enough so you can jump over it, and that doesn't seem to fool the traders out there. XLB still just kind of grinding aside, a little bit downward pressure. It's doing a retest regen bullish. XLE still hanging, really nothing special there still. Let's see what the financials did today. Let's grab the financials, and if we look here on the financials, still nothing there. No volume, a little bounce. So what? XLI also kind of looking like the IYT. This is a setup to take it down to those lows. Still not looking like it can do anything. XLK we've been talking about is struggling and still is. Nothing there really. The safety sector, XLP, got a little bounce again today. That one's holding on. Now it has two swing point lows as well down here and has them on the weekly as well. So if we see that one roll over, that also would be a big deal. And let's move on. Utilities. Utilities are the ones they think will have the best earnings, but of course utilities were the ones that had the best run over the last 3-4 months, so up until recently. So I guess that's not a surprise. XLV, biotech hurting. XLV does an ABCD structure to the downside. Now this one's going to take it right into the lows. On a longer term basis, not a huge problem, but this structure should take it down here to where all these lows are. And even though it could still hold there, the problem is, as you always know, right, the problem is if you start breaking those, you're going to have these on this time frame, the weekly, at risk as well. So when I look across these sectors, and again, these are things that have to come true but haven't yet, they're setting up to try to go lower, and that's going to be an issue if those earnings don't start to bail this market out. We saw the dollar weaker today, and it was interesting because even with the weaker dollar, gold could not move up. So here's the dollar spikes down, and we go over to the commodity markets. Silver pulls back and actually held pretty well. Let's see what gold did. GLD, let's see what that one looks like. And that one actually held up pretty well. So that's not too bad. Bonds sold back down today. Let's take a look at these. Really nothing there. It's just consolidating after the run higher. FXE, FXY, these should have had a nice little push back up. They did. They're just consolidating still. FXY has been consolidating for quite a while. And the big beneficiary of late has been probably on the EEM. Let's see what that one looks like. And yeah, it's got an ABCD structure, finishes up, breaks two swing point highs. And if we look at it on a weekly, you can see this. So, weaker dollar helping the EEM, the emerging markets, try to trade higher. Let's go to the final thoughts. And with the markets closed tomorrow and that employment number coming out, it will be interesting to see how the futures trade in the morning because they'll be open. But also, when we come back on Monday, what does this market want to do? Let's see if we can get a heads up on that. So as we come back here for the final thoughts, what I'd like to leave you with is the idea that these markets are range bound, and that really, the key here is what happens when this range breaks. If you take and do these two areas, right, there's kind of two ranges here, the overlap in between here. So if we overlap it, right, that's the overlap area. And you can see where this market is right now, and it's fighting this little area, right in here. It's fighting to hold this area. That's the key area. Because if you get under there, you can go test these lows again. If you can get back over and stay over it, you can go test the highs again. This is the battleground. This is where everything's happening right now. And the reason it's the battleground is there's a lot of uncertainty in these markets. You've got economic issues. You've got the Fed saying they may raise rates. You've got earnings coming up that are expected to be bad. All of those are negatives. What's positive? Central bank intervention. If I go over, and let me pop up a couple charts for you here. If I go over and look at the Hang Seng, for example, the Hang Seng breaks out, right, doing an ABCD structure up. This is China via these stocks, the 8 shares. You could look at the China Shanghai index itself, looks about the same, even stronger. The other thing that's strong today, Hong Kong breaks out. Folks, the issue is not with the U.S. market being the strong one. The issue is the rest of the world. Europe's at highs, hanging there, consolidating, not backing off. Asia, and we didn't even put Japan up, but Asia at highs, making new highs. U.S. markets being held at these higher highs, not based on economics, not based on central bank intervention, not based on any of those things, based on the fact that the rest of these markets continue to be higher. It can't drop, or it doesn't want to drop. Now, it doesn't mean I shouldn't say it can't, because it can, but that is what's holding this market up. We'll see those unemployment numbers tomorrow. I think the risk is to the downside, not the upside from here. It's not a clear-cut case, just like yesterday. We didn't get anything today to tell us that. It's just that, you've got another week of chop probably coming, and we're probably going to keep fighting this battle in this area until we get a little clarity, and that clarity is probably going to be the earnings coming up in a week from now. That's it for tonight. Thanks for joining me. Have a great one. I'll see you Sunday for the weekly show, Sunday night. Until then, take care. Good night, folks.